All right, welcome y'all. This is Steven, and it's another video. We are in the July 29th overnight session. I'm going to go over my prep. Going through my prep from the daytime, I was pretty bearish to start. And apparently, today hasn't been the best day for me so far. But that's okay, right? You can only plan, make your decisions, set your risk tolerance, and continue to make improvements. So I came in thinking, okay, we have FOMC tomorrow. We had a pretty strong move down. We closed power hour, moving down even farther. So we were red during power hour, and maybe we continue down farther. So I decided that we'll wait for a little bit of a retracement, and then we'll try to drop in and see what happens. With about 10 points of risk, maybe a 1-to-1 ratio, just to kind of see if we can continue the move down. So we looked at MNQ first. Then we decided to get into an MES trade, which is basically similar. So we'll pull up the MNQ, we'll pull up the MES stats and do them live together. So we took futures opening range breakout, and we chose Wednesday because it's the Wednesday session. And we get a double break 44% of the time, single breakout 24 and 28% of the time, no breaks 4% of the time. So we're more likely to double break. So I saw that up move. We did break to the top, and 4 out of the last 5 Wednesdays we double broke. Okay, so that kind of coincides with my bearish outlook. This is just based off open range breaks. Now let's take a look at opening range breakout, initial balance breakout. So initial balance breakout, this is the first hour of the session. Candle time frame is 5 seconds. Usually there's a single break of the initial balance for the first hour. Now we'll go into TradingView and look at that. Let's actually look at that now. We'll come back to this report. Just kind of stuff through all this together because I think it's kind of important to. Not sure why we don't have Bookmap up there. There we go. All right, so let's do this. So our initial balance, let's close that up for the first hour, is right there. So we got a single break of the initial balance. So if we're saying like, okay, the initial balance broke and coming back to our Edgeful, we see that this is pretty bearish, bullish, single break 70% of the time. And I think it broke pretty hard here. Will it retrace? Possibly. Let's see how far. Let's go by weekday. Let's see. That was just generally speaking, 72% Wednesdays. It's a single break. And 4 out of the last 5 occurrences. So that's not looking pretty good for us in the current trade that we're in, which I'll discuss shortly. Buy candle close 1 hour and candle time frame 5 minutes. So now let's look at the opening candle continuation. So we'll start with by weekday, and on Wednesdays this is a 15-minute opening. 56% of the time a green day closes green. This is only during the Sydney session, okay, from 6 p.m. Eastern to 3 a.m. Eastern, pretty much before the London session. 66% of the red day when it's a red candle. So we're slightly green now, and this is veering towards bullish again for the session. And 3 out of the last 5 were closed with a green candle, and that's daily. Another thing we had today was an outside day. We started outside of the range. I'll show you what I mean by that. Coming back into TradingView. Let's do Bookmap and TradingView. And choosing by weekday. So this says 67% of the time on a bullish outside day, price did not reverse. Now, what we have here is a bearish outside day. So we closed below yesterday's range, and I think I can show that to you here. So yesterday here was our initial balance, and you can see that the purple highlighted area over here to the left, that was our daily range. Coming back over is we actually opened outside of that range, just barely. Or did we open inside? It's pretty close, right? It's pretty close, right? So that's kind of subjective. Pretty close. Let's zoom in on this and put a line. Let's see if we can hone in on that. We'll turn it yellow. So we opened just on the border. So I would call that an inside day. So let's go back to our Edgeful, and we're going to change the report to an inside bars day. We'll make sure that's by weekday. And by Wednesdays, it's 50-50. Opened within yesterday's range, stayed within 4 out of 8 days. So that's a coin flip. Okay, so we did open candle continuation. Anything else that we can do here? Actually, we had CPI reaction today, right? We had consumer price index. And when there's a green reaction, it was 100% red day. That's kind of crazy. That was during New York. That happened today, right? We had a green CPI. It was a little positive, and the day was red. That's crazy. This is a report that I'm gonna go back into. That's kind of an interesting stat. This is one I need to dive into a little bit more. Notice how you cannot do it during the Sydney session because it happens during the New York session. So there we go. Green red days by weekday. Here's another one we could look at. Day close red. This is New York session. Let's come back to Sydney. More green than red. And Wednesdays are far more green than red, even the most green day. So not looking great for us right now. Now we obviously know today everything was fairly bearish throughout the day. So that being said, here's kind of how you can use Edgeful just to get some data to kind of determine what's going on and what might happen, at least statistically speaking. Now, gap fill, really have, well, there is a gap. Let's take a look again at TradingView. Do TradingView and Bookmap, and I will pull it up as well. Now, we did have a gap down from yesterday's Sydney session to today's Sydney session right here. So there's a little gap down. And make it TradingView and make it a little bigger so it's a little bit easier to see. So we did have a gap down. And going back to our Edgeful reports, we can see that gap is not filled 64% of the time when we gap down. And if we do that by weekday, to dive down a little bit deeper, 64% on Wednesdays. It's not filled. And we could even go to see how far is it filled. So even at 50% fill, 45% it's not filled. And if we change that to 30%, do we fill the gap 30% of the way? Now we're up to 64%. So we could expect about 30% of that gap to be filled 64% of the time. What about 20%? That's going to be filled 73% of the time. So one way to use Edgeful to find some interesting data. Now coming back to TradingView, looks like we're about to get stopped out here. I'm gonna open up my quant tower because that's where our trade is running, and we're pretty much about to well, not quite. We gave ourselves a little bit of room, but we're retracing back to. Gonna get rid of this range. It's not very important. It's kind of busy, as a matter of fact. So we're definitely making higher highs, and we are making low or higher lows and higher highs. So 1, 2, 3, 4. Higher lows, 1, 2, 3, and 4. So we're definitely moving back up and retracing some of that ground that we lost. Now we just created this range, and I anticipate this range is still being formed right now. So this is the current range that we're in. And if we look behind us, this was the previous range before we broke out of it. Now it broke out of the range, retraced back, and that might have been a signal right there for me just to get out, right? Retrace back to the zone because it took off and continued to go. Now I'm expecting this to come out, retrace back to about 50%, and then take off even higher. And we may even see our way up to 416. So obviously I'm on the wrong side of the market. Moving back to TradingView. We're coming back up on some of these VWAPs to test. You can see, let me move that back. Those are previous executions. We can see that we dropped below this red VWAP, kind of went up and down, bounced off the blue VWAP. This is a VWAP from Monday at 2 p.m. It's a swing low that we created, and we continued down, made lower low, swept the low all the way back to Thursday, essentially. And probably the next low we're going to target, if we come back down, would be somewhere around there. And right now we're working our way back up to these VWAPs. So far, this is our range. We broke out. Obviously, there is a chance for a double break, but the way it's looking right now is that we're just moving back up. I would like to give it some time to see if we bounce off of this VWAP. So I have my stop a little bit higher. And actually it says 412 here, but it is really, let's take a look at it because we made an adjustment. 416.25. To keep it 1-to-1, we need to keep it at 415.25. So that will be our drop dead that gives us a little shot to bounce off of this VWAP and maybe continue down lower, because there is a possibility that this is just a pullback. So we came down, made lower lows and lower highs, and retraced a little bit, started to make lower lows and lower highs, retraced a little bit. We can continue to make lower lows and lower highs. If we look from a higher time frame, this would be a higher time frame range. We have a range right here. We have a range right here that we step through. We have a range right here. And then we have another range right here. And we have another range right here coming back up to the upside. And these were all on the way down. And this is the one that you could also count as a reversal, that range right there. So as you can see, there's ranges within ranges. So since these are no longer in play for the moment, we can get rid of those, but we will likely revisit the top of the range at some point, or we might have a reversal that we could try to get into to come back down. All right, so that's where we're at. Let's see if we respect this VWAP from the Tuesday morning. This is our morning low. It's our morning swing, pretty much our lowest point before we started to move down even lower. Now, technically, we could probably take this VWAP and put it at the swing high, which was the start of the day, 9:30, right? Which is very similar, right? We're still kind of in that range. Just raise it up a little bit more. So that's kind of how I use the VWAPs. Then we have this VWAP from the lowest point of the day. This is at the end of the day, right before close, about 15 minutes before close. And these times are New York times. And we ended up slowly coming back up. But I would say we're still in, technically speaking, in a higher time frame. We're probably in this range right here. So right now we are in a trade and coming back to Quant Tower. We are holding that 412 line, and we do have some resistance right here where it wicked off of before to go back up. Maybe this support here, and we rip through it, has become resistance. So this might be my drop dead line right here. If we go through that line, it may be over for me. We have this big 261 orders. Let's go into Bookmap and TradingView together. And I'm just going to have to reduce the Bookmap screen size. There we go. And we can go Bookmap full screen. Moment. So the level we're looking at is this 614 level. You see it's just slowly creeping up. Aggressive buyers, aggressive buyers, aggressive buyers. And if we look up a little bit higher, there's a lot more buying interest. But we need to get through this wall at 615. Really not interested in continuing to move the stop up any farther because we want to keep it at that 1-to-1. So if we look back at TradingView, we said our stop is 415, right? That would give us our 1-to-1. So that's all we're willing to risk on this trade. And we're just about there. So back to Quant Hour. Make sure our stop is at 415. And that's pretty much where we get out of this trade. So we're down 36.25. It's one contract. And we'd like to take it all the way back down to this low. But realistically, I don't see that happening today. So odds are is we're going to get stopped out. Maybe if we get a little bit of a retracement back down into the middle of the zone, we exit. If we see price start to move back up, we'll also take a look at the order book to see what's good there. And that's pretty much our situation. So starting out with a L most likely, but it's not over till it's over. We are at the top of the volume profile. So CVD is moving up along with price, and maybe we continue upward unless we really start to see some aggressive sellers, or we absorb all these orders and then just selling or buying just stops. We can slow it down and stop it from going up any higher. So I will pause and come back in a moment. Okay, y'all, we're back with an update. Now, I did exit the trade. There may be an opportunity to get back in, but I'll kind of explain to you why. We were coming back to the VWAP, and we pretty much, I feel like we're going to be testing the VWAP here, and we may reject from it, or we may continue down in the direction that I originally thought we would be going. And we may actually double break today. But if I go back to Quant View, you're going to see that we had a pretty strong rejection wick right here at the VWAP, and there's a lot of, obviously these aren't in alignment. So this is 406, but on the chart that's 407. So 406 is where there's 116 orders sitting. So that would be about right here. But there's also a ton of orders lined up down here to both sides. So what I kind of feel like we're going to do is chop in this area, and I'd rather take a tiny loss than to see it just take off again and go right back up to the top. I'm not convinced that we're going to go down here. I'm convinced that this is just a pullback before we move back up higher at the moment, unless I see a double break. If I see a double break, that kind of changes things a little bit. So let's go into TradingView. So we exited. I probably won't have the price exactly right. We exited the trade. Well, we'll keep this up here. Well, I guess not. We won't, because we exited the trade. So we exited the trade right here. All right, so we took about 1.5 points of heat, and we can see that it's bouncing off of that and rejecting. This isn't a session VWAP, but I could start a session VWAP, and you'll see what I mean here. So this was the first candle, 1800. So I'm going to anchor to this candle, and you can see how we respected the VWAP from the session start, and then moved up higher, coming back to test it and bouncing off with an aggressive rejection. Yes, we could continue to go down, but I felt like this is a good opportunity to get out of the trade. until I get better information. So I'm absolutely happy that I put my stop where I put it. Looking at the order flow, real-time order flow, I'm absolutely happy that I minimized my loss and just got out. And let's take a look. So our see what our trade was. So we lost $12.50 on that trade. Prior to that, we had a small trade where we took a $5 profit, but it was early session, so kind of just got in and out. Changed my mind. So for the session, we're about down $7 or so. Now it could definitely continue to go down, but we're kind of in this area right now where there's lots of orders to both sides, and I'd like to see us break through this range to the bottom, but more likely we're going to come back and retest the top of the range here. And one trade that I could have taken was, instead of, I could have just taken a long from here to take it back up to the top of this range here. I see that happen often, is that's a really solid setup. It's just to take this nice small move from the middle of the range, or 70%, 50%, sometimes 30%, where it will reject and continue up. To me, this looks like we're going to continue up. We're making higher highs. Higher highs. Here it's more of an equal high. Then we made higher high, higher high, higher high, higher high, higher low, higher low. Well, obviously I'm on the wrong sheet. So higher highs right here. We're making higher lows. And we're going to come back and hit the top of this range before it decides what to do. Sometimes it'll come back this twice before deciding, which may be the case considering this is the trend line is being established right here, which you can't see the VWAP. Let's go to TradingView. I think that's a little bit better way to illustrate it. Pull up a trend line. So we're going to go with these up candles and we're going to take the last, three of them. You see they line up pretty well. So that's our uptrend. And we did hit the top of that range again that I was saying, where this is the previous range. All right. Then we put in a high. What I could see happening is us put in a low. This is another way to look at it. And when we leave this range, let's try this. Let me get rid of that. We're going to get rid of some of these boxes. They're just a little bit of an eyesore. So this trade's over. And that was our loss right there. And we basically broke back into the initial balance, wicked back into it, and then took off, which just happens to also be the area where the VWAP is, and where we have a trend line that also is moving in the same direction as the VWAP, which is sloping up. Now, we could say that this is a range, and price came back to 50%, tapped it, and continued forward. So my next play would be to say that it's still an equal high because we haven't closed it with a body close, but my next range of interest would be here if we get a body close above. And then I would be taking another long position from right here to the high, whatever that is, putting the stop loss just behind. So that would be our next trade idea. Considering that I'm going to show you this and it'll make a lot more sense. So we put in a higher high here. So we could say that that's also a range. Notice how we tapped right back into 50% of it and left, right? So we'll do these one at a time. This is kind of fun to look at it this way. It's one of the first strategies, and I don't know why I don't use it because it's very reliable. So we have this range right here, right? We put in a high, we put in a low, then we broke through it, retraced back, and ranged up again. So then we take the high of that new range, and obviously there's ranges within ranges. And the same thing happened. We left the range quite a bit actually, came back into it, tapped into 50% and left it. Now we come up to the next range, which is right here, and we can expect to do the same thing, which is where this comes into play. Now it may not be 50%, it may be 70%, it may be 30%, maybe right where the VWAP is, right? Because the VWAP is sloping up. So that's the idea. So our next entry that we're looking at is about 410.25. Let's go into Bookmap. Let's see what's going on over here. So for Bookmap, looks like we bounced off the VWAP, which is this blue line, absorbing some of these orders, but didn't quite break through these buy walls. We do see that CVD is moving back up and now starting to flatten out again. But we returned up to the second deviation of session VWAP. So this is starting at the session open. And now it looks like we're going to consolidate for a bit right here in this range before moving up higher, then pulling back and continuing up. So that's my bias at this point. But we'll see, right? We'll see. So technically, I think maybe, let's go back to the TradingView. Make sure I'm looking at this right. Obviously this, so that's how we kind of built this range, going higher and higher and higher. Now you could say that this is a range, but it's really on a different time frame, right? That's on a lower time frame. That's like a 1 minute range. Okay, and you could also check these ranges. If we go up to 8 minutes, we can see that we made a higher high and a lower low, so it looks a little different, right? This looks like it's a clean 8 minute range, and this also looks like it's clean. And from this range, we already broke out of it, and we're going to come back and retest it right now because we wicked out of it, which counts, right? So on the 8 minute, let's redo these ranges on the 8 minutes. So you can do them from time frame to time frame as well. And they work pretty good. So it's not the current range that we're in, but it's in a previous range. I'm going to keep these executions on just because let's just drop the opacity down for a moment so we can see better. And we'll bring it back up after. Okay, so on the 8 minute, we put in a low, then we put in a high, then we put in a low. So we're still in this range right here until we make a new high. So for instance, once we break out of it, this becomes the previous range because we broke structure to the top right there. So then the next range, we could say that this is an 8 minute range. We could say that that's a range. But to me, it's a smaller time frame range. Now we come up here, this is a little more indicative of the next swing range up. And if you look, they're pretty close in size, right? So now we just wicked out of that on the 8-minute. So I'm anticipating price to come back to, in this case, here before continuing to the upside and taking out the high, whatever the high is. So that's an 8-minute range, right? So you could play it that way. So let's, oops, we're going to keep that there. So let's go up another time frame. Let's go to 15s. I guess it's this one. Now I know we have this. We're going to make this, let's make it 20. So that was our previous trade. Let's go up to 15-minute time frame. Obviously, these ranges aren't as clean. So we have made a lower low, put in a high, then we put in a low. So you take the last high and the low that put in, and that's a range. It's the first range that started. So the second one, we make a higher high, then we put in a low. So it's the low and the high that put it in. So that would be here. All right, so, but they're not very clean on this time frame. So I don't like how they look. They don't really present well. But the ones that do present well, and that seems like the most logical time frame that's controlling the price action, is the 5-minute to me, because we can clearly see that we're still in this range. Technically, we haven't made a new range yet. I mean, I think we want to body close out of it first, but sometimes a wick out and it comes back in, and it may hit it twice. Obviously nothing happens 100%. Again, we could call this a small range, but I think this is more of the range. What we can see is we almost tap into the 50% there. Or actually, that's, so we put, so it's the, we make a new high, it's the low and the high that put it in. So it's this range right here. Or you can see how it gets confusing, right? Especially with all this shit on the screen. So let's get rid of some stuff. Oops. You go into my drawing items. Cluttered screens just really suck. So we're gonna hide the long position, and we're gonna hide the short position. And now we have some clarity. You actually see what's on the screen. So let's back this up again. Let's make it a little bit bigger and a little bit easier to see. Okay, so we made a low, then we put in a high, then we put in a low. So the high and the low that put in this low creates the zone. Then we put another high and put in another low. Technically, this would be our next zone. But here's the thing. This zone is inside of this zone, so it doesn't count. Okay, so we have to wait until we find a break of that zone, which is right here. Then it's the high and the low that put it in. So that's basically our next zone right here. Right. We could say till it gets broken right there. So that's a zone or a range. Then we retrace back into 50% of that range before leaving it again. And we could say that this is next range. Again, tapping into 50%. Here, tapping into 50%-ish. And then now we have a third range right here where we haven't fully left, but I do anticipate leaving and coming back to here. Now there's a caveat when price ranges up like this. It usually, again, we said this doesn't count, right? Because it's inside of the other range. But interesting enough, it's still tagged into that 50%. So maybe we can count it, right? Maybe we messed up on this one because maybe this is a range. High that put in the low before we put in a new high. Maybe that's the range. Right, so you really have to use your best discretion to try to figure out how it's ranging. That's a pretty big range right here. But it's similar to this size. So that's on the same time frame. That's how you kind of look at it. This one, a little bit smaller, not as wide. It's on a smaller time frame. You could even go into 30-minute ranges or 1 minute. Let's look at the 1 minute or the 3 minute. Let's go to the 3 minute. And even to make it a little cleaner, we'll remove all of these additional things that are distracting. So this is a 3-minute range. So here we already broke structure. And I almost don't count that wick because it's kind of like manipulation. That's kind of like a liquidity grab there. So I would say that's the range. Then if we go back, the high and the low that put in this high would be the next range. We can see tapped right into 50%. If we go back farther, the high and the low that put in this range, so there, before it was broken. And then we come back again, the high and the low that put in this, but this encapsulates this. So I would say that this is the range where we didn't quite get back to 50%. And lastly, we put in a low, put in a high, put in another low. It would be the high and the low that put it in. So that's even cleaner. So now we've went up once, twice, 3 times, and 4 times. I'm actually anticipating a retracement after 4 to 6 swings. So to be honest, another good thing that we may want to look at if we include all these wicks here is a short. And even from a range that hasn't been fully mitigated, which is that range right there. So that might be an opportunity to go short. And if we get back to this unmitigated range, none of this has been mitigated yet, right? But basically, or none of this has been mitigated. We're likely that would be a good spot to take a long from. So just some food for thought. So we got VWAPs, right, where we're in between some shorter time frame from the close, the swing low close, volume weighted price, average price from the open of the session where price is respecting it, and we have some other VWAPs from the high of the session before we started dropping down this morning. This is 9:30 up here, and I anticipate us retracing to here before we retest and maybe continue down, because it may be a pullback or equal lows or equal highs sweep the low. The high to the left is higher. Wouldn't surprise me if equal highs swept the low and we come all the way back to this area right here, or somewhere below, maybe here. So I think that's enough for this video. I'm going to go ahead and stop it and pause it, or just stop it, upload it, and there'll be a record discussing the trade, how pretty much a break-even trade. We lost a few dollars. Not going to count it as a loss or a win because it's fairly minuscule. I'm just going to stop it here, and we'll try again if we see another setup, and we'll deal with that when we get there. Thanks for watching.